keep buying, right as price flips, trapped again and again. It feels like guessing, but really you're missing one key structure clue. Look at this move on the 15-minute chart. It looks like strength, breaking higher, but this isn't real strength. It's a test back into supply. Most traders buy here right into the flip and get stopped out fast. I used to fall for this setup all the time. Thought I had structure nailed, but I wasn't seeing where the impulse really ended. Once I learned how to spot where the impulse actually finishes and where supply really lies, my trades stopped getting trapped. I finally started with the market flow, not against it. If you understand structure but still feel stuck when it's time to actually place trades, this is where everything clicks. You'll finally fix the missing half of your trading system, the part that turns smart money setups into real, confident trades. No more hesitation, no more late entries. Once you see this, your charts will never look the same again. Hit the link in the description to get started. This is where confident execution begins. Now, let me break down exactly how to spot when the impulse is done, where the true supply zone sits, and how smart money avoids these traps. The most simplest way to stop getting caught in those traps is understanding two things, and that is understanding multiple time frames with your structures and understanding internal and swing structures. And we're going to cover some of that now in this video today. So we're looking at a Euro USD on a 30-minute time frame, and the first thing we need to understand is marking up your structure points in the market. Now, eventually price is broken down and you'll see that this eventually was your target. Let's go into a replay area and we'll come back as price comes up here. And I'll show you how this would play out in real time. So we understand that our structure is bearish by looking at where we create our lows in the market. Now applying our structure breaks, when we see this candle closing above this previous candle's high, it creates a valid low. Now, the same being said, this candle closing up to downside is what gives me my valid high here. So there's your break of structure. Once we see this break of structure, we look back to find our new high. This is going to be your new high when we see the close up. And this is where many of you are going to start getting wrong. We then have this as a new low and we move this across. This is where we see price eventually closing up here. Do we close up here? No. So this becomes my valid low. That's my low for new break to downside. So again, it's a valid break once we see the close through. That's another thing you have to understand, is that you need to see that valid break to downside. If you didn't see the previous video where we understood about the wick break and why it's invalidating your trades, keep watching the end of this video. You can watch that next. Now, potentially you may be making this mistake we're going through right now. And if you are making this mistake, you're trading into supply or trading into demand, getting caught out and the market's reversing, do leave a comment and let me know this is happening to you right now as well. So we have another break of structure here to the downside. Again, once we see that candle closing down, there's our last close up. That becomes your new high. Now, what is this high creating? This is creating our high of our trading range. Why is it important to understand your trading range? Your trading range is where everything is going to occur within. That's where you're looking for potential trades. So we now have a continuation to downside. This is the first time we see a closed candle to the upside. So marking this out, what this is going to be is, as we're in a bearish trend here in the market, you're going to be looking at a weak low in the market. This is where you're going to mark this out as a potential weak low. What this high becomes a strong high in the market. Now, why is it a strong high? Because this is where we're finding price is holding and pushing to break structure to the downside. That's why we class this as a strong high. Let's just make that a bit bigger so it's all in line. So from this high to this low is our trading range. This is where we're going to start looking for potential opportunities to sell with that range. So we can see it's a bearish trend here. And what you're looking for is price to come back into an area of supply. So from this area, this is our last buy. Our full zone is this low to this high. So if I was marking out a full buy to sell area, it's this area. We can also mark off the last buy to sell candle. But I like to have both areas in mind, and that's how it's going to help you to figure this out. So let's go zoom into this area now and start reading what's happening. On a swing structure, on a higher time frame, this is why it's important that you're reading this with multiple time frame structure and swing and internal structure. That's how we can apply the multiple time frame fix here and the use of internal swings to identify where you're going wrong. So we now understand that this is our swing pullback on this time frame. Price is coming back into this area of supply. Now, if you're not watching this 30-minute time frame, being your higher time frame with area of supply above, and you're not watching this, and all you're looking at right now is this move here to the upside on a lower time frame, which many of you potentially are doing. If that is something you're doing, drop it down, let everybody know that you're constantly looking at those lower time frames, forgetting about the bigger picture and where potential higher time frame sits. That's where you need to be looking at, is your higher time frame zone. So as price comes into this zone, if you are looking to buy at this area at the high where we're into the supply, that is where you're getting trapped. And that's where you're buying, whether it's the breakout or coming back into an area of demand, and then it flips and continues to run the week low. And you've been stopped out and you're not sure why. This is exactly why. So make sure you continue watching the rest of this so you can see how this is working with the lower time frames. So understanding your high time frame perspective is important. We understand what we are bearish, and this is our swing pullback. This is our trading range. This is the supply zone on this time frame. Now, when we pull back into this area, if you're only looking at a 5-minute time frame, let's say, we can see on a 5-minute time frame a higher time frame perspective. We can now identify this is a swing move and a swing pullback. But if you're not looking at that, and all you're looking at and zoomed in on is this price action here, all you are zoomed in on, we just get a pen, is this movement here in price. And you're just looking at this to continue bullish. You're not even thinking about a higher time frame perspective here. That is why you're getting caught in this trap. Now, what do I mean? If this is our swing structure, and this is now where it comes into not just multiple time frames with that higher time frame, it comes into your swing and internal structure. If this is my swing move, what do you think this is all going to be? Okay, well, mark these off as a dashed line. And I'll mark this off as what I class as a IBOS, internal bracket structure. And we'll make this a bit smaller as well. So this is my break to downside. Now, once you understand price, and this is broken down, we look back for the last close up. There's my last close up. So what I can now mark off is this is my new break of structure to the upside. Okay, very simple. The structure stays the same. It doesn't matter whether we're marking this out on a daily, a monthly, or even a 1-minute time frame. The way you use my smart money structure is identical on every time frames. Once you get that concept right, everything else will fall into place. So now you have that we have a bullish trend, and that is true. At this point in the market, once you see this break to the upside, we are bullish. And even myself, I would be looking to buy this market, and there's a reason why I'd be buying this market, but that's something for another day. What I want you to take away from this video is to stop getting caught in these traps where you are basically buying into supply or selling into demand. And by the way, anything that you are seeing on the chart right now that I'm going through, you can flip this over with the different direction being selling into demand. So let's now go from this point. We see the market pulling back. That creates a new valid high with this smart money structure. So this becomes my new structure high. Now we only wick through. And again, if you didn't see the previous video, it's coming up at the end of this video, it goes through understanding about wick breaks. So I'm not going to go into that right now, but you can watch that video next. Now when price pulls back, what we do see is a nice sweep of the lows. And this is crucial, and this is where I would be looking at entry all day long to continue higher from here. And that is understanding sweeps of liquidity in the market. Once we break the upside, okay, that's going to give me understanding this is now going to be a low in the market. That's going to be what we class as that strong low, just like we see on this higher time frame perspective we've marked out, where we have a strong high and a weak low. We now have a strong low down here, and we're going to be looking for the weak high. Well, when we break up here, this is our weak high. Why? Let's just go through this, walk through it. Once we see this bearish candle closing below that candle's low, then that becomes, let's zoom into this area of price now we're walking through. This candle here, I'll mark it out with an arrow so you can see. When this candle closes below this candle's low, that's a valid high to be marked. And I'm not going to mark it out as a valid high because you can learn that in many other videos. In fact, if you want to learn more on how we look at the valid high and valid lows, then please leave a comment below that you want to see another video going into that more depth. But right now, this is where we create a valid high. This is our pullback. New breaker structure to the upside. You're following price at this point. The next close down, where does it come? It comes right here. This now means we have a new valid high again. And this becomes a new break of structure. So again, we have this wick through, pullback, and a break to the upside. All of this is key to understand. And we now create a new low. So again, we would have a low formed down here. Let me just mark that off. This would be a valid low when we see the break to the upside. Now, once we have the next close down, which is going to be this candle here, we can mark out another valid high. And this is where potentially you are now looking at a continuation to the upside. Let me just drag this back so you can see what's happening. So at this point, you could now be marking off, let's say you see this move down. Okay, you've got a area marked off here, let's say. You're buying the break, the pullback into demand to continue higher. You see this candle wicking through the high, you see a nice big outside candle, and you are thinking this is going to go higher. You're going to buy this candle as well to go to the upside. You're looking for a long-term buy here. That's how you're seeing this. You're not seeing all this supply on the higher time frame. You're buying into supply. There's the trap right there. Now, as soon as this happened, this is an outside candle, basically sweeping this high, a previous high. That screams to me even more so that we're inside a higher time frame supply. That's why it's important you do your homework and go through marking your charts properly with smart money structure and using multiple time frames and your internal and swing structure. This is the point where it screams to me selling. The market is going to sell right here because we've created an outside candle at a high. You do not want to be taking these candles at a high. If this candlestick appears down at a low, swing low, fine, but not when you're taking these at a high. So from this point, you're going to find this is going to be a losing trade. I'll be looking to sell this market. So what are we looking at right now? We're looking at this low here to be a new low to be broken. So I'll mark this off. And by the way, this current high is not a valid breaker structure. So it's not an IBOS really. It's just a high in the market. So what we're looking for is a shift in structure. That's how you read correctly when price moves. But to start with, you're trying to buy now into this supply, which is where you're getting caught in your trap. Instead, you want to be waiting for price to come out of your supply to sell. Now, without doing your higher time frame and using multiple time frames with your swing and internal structures, you never would get this right in the first place. So we just go forward with price. You'll see what happens. Okay, there you go. Straight away, there is the shift to the downside. That candle breaks the low. Just by a pip, but it breaks the low. That's a shift, and there you are. You're in your losing position, and you've taken another losing trade. So where do you need to change it? Before we wrap up, if you're tired of second guessing trades or stuck wondering why structure still isn't working, this is your turning point. There's a proven path where smart money structure becomes second nature and consistent profits stop feeling random. That's what Danny found after nearly $300,000 in losses. He didn't just learn structure, he mastered it and rebuilt his confidence from the ground up. If you're ready for that kind of shift, your next step is simple. Click the link in the description and apply for early access to the 90-day profit trading system today. You need to read this market with a higher time frame approach, read it as a swing and internal structure. And right here, and then we just mark this out, we get a new break. In fact, we grab this one at the top. Grab that one. A new break right here to the downside, which is going to give me an area to sell from this last buy to sell move. Why is this a good area to sell from? This shows me the intent to go lower. This is my setup on the second era. Perfect time to sell the market, stop above the high, and we look for the week low. Why? Because we're now seeing internal structure aligned with my swing structure. That's what I'm looking for. Price pulls back. Okay, another deeper push in. So if you missed the first one, you look for the next one. And this is where you continue to hold to run this low. Now, again, reading the market. And again, if you want to learn more on this, check out the 90-day fix. That will help you. We have a sweep here at the low, bringing in some buyers, pushing the market up high to bring in those buyers. Now what I'm expecting to see is a nice run to downside. What's that market doing right now? It's just pulling up into taking out this high. You see this high left over, sweeping that high to take some liquidity into the imbalance above. Now we should see the drop. And that, my friends, is where you're going wrong when it comes to understanding buying into supply trap, selling into demand traps you're getting caught into. Now, if you want to take 2 time frames even further, this video coming up next is going to go through a complete walkthrough of how to use 2 time frames when it comes to smart money structure.